This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino. As the mortgage market continues to shrink, we know many of you want to know what to expect for the rest of this year and into 2023. Well, today, MBA chief economist Mike Fratantoni told us what he expects with the industry shrinking. Our own Christine Stewart has more.
So we've come off of two record-setting years, $4 trillion plus in volume in 2020 and 2021.
MBA's chief economist Mike Fratantoni stated the obvious during a virtual press briefing Tuesday. The closest the market came was in 2003, which was almost a $4 trillion year.
Our forecast for 2022 is $2.3 trillion, so a 47% decline. Most of that decline on the refi side, but now we're also calling for a drop in purchase. So our forecast is for about an 11% decline in existing home sales, 8% decline in new home sales.
What will happen next year?
Next year, we're forecasting about $2.2 trillion total, so down from the 2.3.
There's been a 47% decline in volume. What's that going to mean in terms of contraction for the industry?
But it's hard to imagine that you're not going to see pretty significant cutbacks, and you are seeing that in every news release every week.
But it won't be uniform. Most of the cuts have come in wholesale channels, and it may be in certain parts of the country more than others. But it's not just volume that dropped. The typical lender lost $82 per loan that they make.
Typically, lenders would make 54, 55 basis points in profit on a loan they were making. During the peak of the refi boom, that got as high as 203 basis points.
He says to show a loss in the second quarter shows just how abrupt the change happened. But it's not all bad news. Delinquencies are at an all-time low, and employment seems to be strong.
And if you do get this recession and unemployment goes to 5.5%, yes, this will go up, but we're going to be nowhere near the peaks that we've been the last two cycles.
For the Mortgage News Network, I'm Christine Stewart.
As Fratantoni said, some portions of the industry will feel the crunch more than others, and he identified wholesale lenders specifically. Well, today, another company is getting out of wholesale lending. This time, it's Mountain West Financial. The company posted a notice on its website confirming the decision. Mountain West gave no reason, but said it will honor loans in the pipeline. Those loans had to be locked in by last week and must be closed by the end of September. Mountain West did not respond to our request for comment and did not say in its statement how the decision will affect the company's more than 200 employees. Earlier this month, loanDepot announced plans to shut down its wholesale lending operation as well. With the market continuing to shift, buyers are exercising their bargaining power. According to Realtor.com, the number of home sales going at or above asking price peaked at 82% in February, and in the last month that's fallen to 69%. Meanwhile, 92% of recent sellers accepted some form of buyer-friendly condition, including contingencies, price drops, help with closing costs, or paying for repairs. And finally, we're looking to celebrate some of the top employers for women. Many companies are racing to reform their culture or offer up new benefits as a way to recruit women to their staffs. If you're one of those companies, here's your chance to tell the industry what sets you apart. Just go to the link on the screen. The deadline to nominate yourself or your company is Friday. Honorees will be recognized later this year in an issue of Mortgage Women magazine. We'll be right back after a word from our sponsor.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.